Hi, I'm Stephen Dean. I'm Chairman and CEO of Atlantic Gold Corporation, TSXV listed company based here in Vancouver, well cashed up and in the gold development business. We acquired our Moose River Consolidated Project along with two other deposits in the second half of 2014. Since then, we've proceeded rapidly to the production of a PEA which reflects the economics and technical feasibility of our original concept, and that is to put together the processing of these four deposits and treat them through the fully permitted Touquoy processing facility and thereby achieve considerable economies of scale. I think the other value add that we've been able to see that others in the past have not seen, and this happens often in different parts of the sector, is that a new look at an old mineral field. The Magooma terrain in Nova Scotia is an area of Canada which has been mined since the 1830s, typically what's called quartz vein saddle reefs, high grade, but sometimes challenging to mine. What we've seen in our exploration approach is that gold is not confined to these quartz vein systems, but in fact also surrounded by a halo of gold mineralization in the shales surrounding the quartz veins. And what that has done is enabled us to have another look at what are now very wide, broad zones of mineralization, which are very amenable to open pit. And our feasibility work is based on that revised approach, and we see the economics of those looking very strong, and that'll be reflected in our feasibility study due to be published later this year. Atlantic has a seasoned group of mining professionals with a project ready for development here in safe Canada with a high plus 30% internal rate of return at current gold prices, low OPEX, low CAPEX, and easily financeable. We're planning to release a consolidated feasibility study for our Nova Scotia project in mid-2015, closely followed by, in Q3, we expect to be able to report some news on progress to procure a credit-approved debt financing from senior banks in order for us to develop the project. And thirdly, in spring of 2015, subject to the financing being arranged before the end of the year, we expect to be able to commence construction in the first half of 2016. I think the best advice in the mining space today is to back people who have built companies in the down cycle of the mining cycle before. We as mining professionals have looked at in excess of 130 companies and projects over the last 2.5 years, and less than a handful of those have met our technical and economic criteria. In fact, over 90% of them failed to meet our technical criteria. So investing is only for the brave. Even with our experience, projects based on public data that should be technically sound are only revealed to have some challenges once further detail have been reviewed. So that's why I say look for the right people, people who have built companies before from this down cycle, who've then managed to realize that shareholder gain through sale or merger with other companies in the business, and thereby achieve significant shareholder value through those exits once value has been added.